Sometimes you gotta go back to actually move forward. And I don't mean going back to reminisce or chase ghosts. I mean going back to see where you came from. Where you been, how you got here. See where you're going. I know there are those that say you can't go back. Yes, you can.
It's about time I did this. So without further ado, today, ladies and gentlemen, I will share with you exactly why Ethereum is an incredible asset for two huge reasons. I will dispel some of the common misconceptions and end with my own very specific USD price target for Ethereum, deeply based in reality, at least as much as predicting the future can be. Now, I know it's a shaky time in the market for this. Tether being forced to produce financial documents to the New York Attorney General's office, and EU officials sharing Bitcoin money laundering concerns. I'm concerned about banks doing the same. Mt. Gox coming out of nowhere with an update on their rehabilitation plan. Spoiler, nothing's really happening yet. Jerome Powell of the Fed saying the economy is unsustainable. All this happening within a 24-hour period. Oh, come on! Very suspicious. But I aim to make a video today that will actually age well, no matter the market conditions. Imagine that, a crypto YouTube video, a prediction video that ages well. That would be something, huh? So, before I upset some Bitcoin purists with a pro-Ethereum video, I genuinely feel like my rationale here will be hard to contend with if you're rational, because I'm only going off of trends that we can currently see. So, maybe I'll change your mind, maybe I won't. I just want to avoid anyone feeling like they missed out on Ethereum in the future here.
A great opportunity squandered? Absolutely. A crushing blow? Yes. Will I get over it? No. But life goes on. Not for me.
Now I'm going to do something maybe a little bit strange, but it will become apparent why by the end of this video. Let me explain why Bitcoin is so deserving of the top cryptocurrency spot and how it impacts my Ethereum price targets so heavily. Kicking it off, Bitcoin has no CEO or even main figurehead. Just look at Brad Garlic Breads as an example of why a CEO is a potential liability. No coin has greater liquidity. You could argue Tether, but shut up. Tether's most liquid pairing is against Bitcoin. No coin transfers more value. You could argue Ethereum does if you include every coin that's running on Ethereum, like Tether and much more. But consider the implications if you did. Suddenly Ethereum is processing 50 times the value that Bitcoin is per day. Does that mean Ethereum is 50 times more popular with investors? No, that would be an incorrect statement to make, obviously. Just stop interrupting, okay? I've got a list to get through here. No coin has fairer distribution. Now, before you spit out your drink, despite Bitcoin holdings being heavily skewed to a few wealthy individuals being anything but equal, fair does not mean equality. Bitcoin was distributed to miners, aka supporters of the network, and the more you supported, the earlier you supported, the more you were rewarded. It had no ICO or the like. Secure, dependable, and simple monetary policy. It is also the originator of it all, demanding respect from everything else in this industry coming after. All of these things add up to Bitcoin being like the center sun for the crypto solar system orbiting around it, for better or for worse sometimes. More on how all of this deeply affects Ethereum later, but for now, let's move on to Ethereum, the reason you clicked this video. ETH has incredible potential. Reason number one, the rise of DeFi. Ethereum is programmable money. But what does that even mean? We don't know the full extent of it, in all honesty. ETH has been out since 2015, and it wasn't until the summer of 2020 that the masses really started to learn the potential of programmable money. Some of the innovations Ethereum has brought to the table include borrowing/lending, automated arbitraging/trading, issuance and trading of synthetic versions of real-world assets, decentralized exchanges becoming even better than their centralized counterparts, Ponzi games, not my cup of tea personally, but undeniably popular, NFTs, and not just art, literally a unique token backed by anything. And my personal favorite, earning interest, aka yield. All of these and more developing daily. Quite the innovation, breathing new life into this space in a remarkable way.
It'll save a life.
Oh, thanks. I used to be a lifeguard. That is a... What happened?
Adoption is no longer a meme. Put it this way, if I was going to buy a house right now, but I didn't want to sell all my crypto to do so, I could use my Ethereum as collateral, borrow stable coins against it, sell those for my house, keep my exposure to my ETH, over-collateralize it to play it somewhat safe, that's such a weird word to say. Arguable if one should do that or not, but at least you have the option. No mortgage company would let me do that.
So you get nothing.
Another huge development is the rise of crypto businesses offering you interest to hold your crypto with them. One of the best, in my opinion, being BlockFi, allowing you to earn 5% APY to just hold Ethereum with them. We never used to see this type of stuff before DeFi made all of our assets that much more deployable. Now, a lot of this stuff on this list is what traditional finance can already do, but finally now it's getting replicated in crypto too. It took us long enough. If we want to be our own banks completely, why not do everything they can? And all of this takes place on permissionless protocols, meaning no one can stop you interacting with them, the umbrella term for all this activity being decentralized finance. Some of those aren't that decentralized, some not at all. A better term would have been permissionless finance, but DeFi is a catchy name and it stuck, plus PFi just doesn't have the same ring to it. Sadly, what is often misunderstood is people saw the Ponzi games on this list and the wild volatility even for crypto in DeFi assets and assumed the entire space was a scam and was scared off any DeFi technology.
So is it any wonder people are afraid of technology?
Technology.
However, as time progresses, knowledge of this particular space is growing, so much so, the acting comptroller of currency, the head of the branch of government which regulates the banking sector, tweeted this article about DeFi specifically. I'll link it below, but it is a surprisingly pro-DeFi take about the need to embrace and regulate this innovation, saying things like, quote, under current law, drawn up on the assumptions of the earlier 20th century, charters can only be issued to human beings, but those antiquated rules should be revisited just as regulations that still mandate the use of fax machines should be. Boom. From yam scandals to the governmentally approved future of finance. Sadly, this director, Brian Brooks, is now out of a job since the Biden administration will likely replace him, but his words will be hard to ignore or overturn, hopefully, in the future. And if you haven't already noticed, everything DeFi is in a crazy uptrend right now, many posting fresh all-time highs, and the frenzy is spilling out onto platforms that feature smart contracts, Cardano and Polkadot, for example, with amazing gains, Chainlink now in price discovery mode and powering a lot of DeFi. Okay, so people are excited about DeFi, but so what? How exactly does that benefit the price of Ethereum? Well, so much of what has supported Bitcoin's recent run-up in price has been the consistent combination of increased demand mixed with reduced supply. We are seeing the same conditions play out for Ethereum currently, no doubt helped in a major way by DeFi. The total amount of Ethereum poured into DeFi protocols is now at 23.3 billion. This is going up by like $500 million a day or something like that. It's pretty crazy. The actual amount of Ether is probably a lot lower than that. The exact number doesn't really matter though. The point is that it is up and it is set to continue to go up. So less Ethereum becoming available over time while the use case of the asset is increasing. Very bullish mixture because it makes it that much less likely for people to dump their ETH bags on us. Moving on to incredible potential, reason number 2, scaling. What is the biggest critique Ethereum faces right now? Too pointy, hard to spell? Mainly its fees. They have been absolutely ridiculous, completely pricing out all of the little guys, and even the not so little, for days or weeks at a time. It's given credence to the notion that an ETH killer promising low fees is more of a question of when it kills ETH than if. However, to truly understand what is happening, consider the following analogy, which I've given once before, but it's important. You're on a high street. You see a club called Ether. It is so packed, the queue to get in extends around the block and spills out onto the street. If you looked at the opposite side of the street, another club, let's call it Tron, for no particular reason, and it's completely empty, and you can walk straight in, but there's no music, there's no drinks, there's nothing inside it really. Which club will kill which again? So the problem with Ethereum is more of an issue of popularity than bad design. All the aforementioned DeFi services primarily exist on Ethereum and benefit from interacting with each other, making it that much more difficult to go elsewhere and basically demanding competitors have interoperability with ETH. And it's also why scaling solutions are such a big deal. If Ethereum is still so popular while fees are so insanely ridiculous, what is it going to be like when normies can participate on an even playing field with the rich? But when will ETH scale, bro? I've been hearing this for years. Version 2.0 of Ethereum, touting much higher transaction capacity and much lower fees, has recently completed step 1 of a 3-step process and introduced staking. Step 2 is estimated for this year, step 3 by 2022. That's disappointing. That's a long time. Actually, in a recent developer update, they are thinking of moving up stage 3 to this year, tackling it first before the beacon chain. So it might be coming sooner than we think. But what if I told you scaling was already here? Synthetics, one of the leading DeFi protocols, just started its migration process to a layer 2 scaling solution. There's a few different layer 2 solutions being worked on, but the most popular, due to its compatibility with DeFi protocols, is a layer 2 solution called optimistic rollups. It sounds like an overly ambitious sushi roll to me, but in short, a rollup is a buildup of transactions that all get completed at once, greatly reducing network congestion. This can theoretically increase Ethereum's throughput from 15 transactions per second to like 1,000. Probably in a best case scenario. Sometimes this scaling solution is referred to as optimistic Ethereum or just OE. All DeFi protocols will likely soon follow suit, including the big one, Uniswap. A lot of traffic is going to disappear from the roads this year essentially, so don't be surprised to see a dramatic reduction in ETH fees.
Surprise! Are you okay?
But what if I told you high ETH fees is bullish? The based god is back. So there's this Ethereum improvement proposal called EEP 1559. That sounds pretty cute. The thing is, this thing is like the holy grail of improvements. Potentially, it mandates that a portion of all transaction fees be permanently destroyed, but we don't know how much will be burned. As an Ethereum dev has stated, gas is broken into 2 parts, base fee and tip. The base fee portion is burnt and the tip is sent to the miner. The base fee is dynamically determined in the protocol depending on demand. This should smooth out spikes and improve gas user experience. How much is that exactly? Pretty vague. But another ETH dev has gone on record to say it will bring Ethereum's 5% yearly inflation to neutral or even negative inflation, which makes it sound like it's going to be a lot. And the more activity, the more being burned. As we can see, there's a lot of activity on Ethereum. Sorry, ETH miners, but we were paying you too much anyway. Which brings us onto another misunderstanding about Ethereum, especially from Bitcoin purists. Another criticism Ethereum faces is the fact that the total amount is difficult to audit and it currently has no maximum intended supply. That sounds beyond ridiculous to Bitcoin purists. It's a debatable criticism, but just as most things with ETH, these things are highly subject to change in future. ETH could one day be, soon, thanks to EEP 1559, benefit from deflation rather than inflation like Bitcoin, and there's no saying that a max supply won't at least be considered in the future. Here's hoping they will.
Exactly.
But what many of you are here for, the cat meme, the price prediction, my Ethereum price prediction. On the weekly chart of Ethereum versus its Bitcoin pairing, an inverse head and shoulders has formed, which totally sounds like a meme, but sometimes traders pay attention to this kind of stuff. ETH is also at the 21-week moving average support. In addition, ETH on the USD charts is 10 to 15% away from breaching new all-time highs. Bitcoin, by comparison, once it breached its previous all-time high and entered price discovery mode, shot up 100% within a few weeks. So Ethereum should be ready to go on an absolute tear right now. But here's the honest truth. Ethereum's biggest support is also its Achilles heel, Bitcoin. Good. Can I just say that I'm only trying to be realistic here, but ETH getting completely decoupled from Bitcoin's price movements just is not likely at all within this or the next year. I wouldn't mind at all if it did. I hold a lot of Ethereum at this point, but I have no reason to believe that will be the case based on what we've seen. Bitcoin pausing or going up is just fine, but if Bitcoin decides to crash, This would inevitably result in ETH and the rest of crypto doing the exact same eventually. Another thing I have to consider is that it took the emergence of DeFi, the explosion of smart contract utility, and exploding total value locks, the launch of Ethereum 2.0 Phase 0, and staking with it just to keep pace with Bitcoin and its institutionally led rally this cycle. Which is very impressive, don't get me wrong. Imagine what ETH would be capable if institutions supported it as much as they did Bitcoin. That's crazy. Ethereum has done extraordinarily well. But I have to keep this in mind for my price predictions and not go too crazy suggesting that Ethereum will outperform Bitcoin by 100 times because, well, anything's possible, but that's just not what we're seeing, and it would be quite surprising.
Succede? Quello è Franco, il nostro cameraman, e vai Franco vai, ha corso tutta la gara con la telecamera in spalla, è incredibile, Melangeni avrà l'oro.
Having said that, we can expect Ethereum to do slightly better than Bitcoin. Using year-to-date performance of 2020, for example, Ethereum beats out Bitcoin gains, as it's done in almost every year since inception, with the big exception of 2018. Anyway, let's get into price specifics, shall we? A rebalancing of ETH to 0.05 BTC per seems likely. A rally once we enter price discovery mode similar to Bitcoin seems likely. ETH slightly outperforming Bitcoin due to a smaller economic mass and being more agile in price movements seems likely. Therefore, a $1,900 Ethereum seems reasonable this year. This assumes that Bitcoin isn't going to turn around and say, the party's over, and crash the entire market. The good thing, though, about price targets using their Bitcoin valuation means we can apply them to various different price points. We've no doubt all seen plenty of Bitcoin price predictions, where it's going to peak at this bull run cycle. A rising sentiment now is Bitcoin to 20K and then moon. I don't know about that, macroeconomics are still bullish, but however we get there, among the most conservative price targets are just over 6 figures. Let's assume that's the case for a moment. At a 0.05 BTC per ETH, this would be a $5,000 Ethereum. Now, I've purposely tried to be realistic with these predictions. I'm hoping to under-promise, so ETH can over-deliver here, where most YouTube predictions are quite the opposite. And my thoughts today are not taking into consideration anything we haven't already seen. Some predictions out there bet on future events occurring, most bullish of which is the explosion of the immensely large derivative market moving onto Ethereum, where more real-world assets like stocks are backed by equal measures of Ethereum, and then the asset-backed crypto is traded globally. Sure, interesting argument. That's going to happen in one form or another eventually, but I would need to see more of that occurring right now on Ethereum to make any sort of price prediction based on that happening this cycle, meaning within the next year or two, because if you're trying to predict crypto 4+ years from now, well, you might as well throw a dart blindfolded. Maybe you'll get lucky.
It's in his head. It's in your forehead.
In summation then, I think scaling and the reduction of fees with it, the huge expansion of DeFi, and price discovery mode all add up to a very beneficial thing happening for Ethereum this year. So much so ETH, at the very least, should still keep pace with Bitcoin, even with only a fraction of its institutional interest so far. I also expect ETH to slightly outperform Bitcoin. And again, if you are holding long-term, consider checking out channel partner BlockFi, one of the strongest backed companies in all of crypto, and get yourself paid for simply holding on to an incredible asset. At current prices, say you had 5 Ether, and you held onto it for 12 months, that's $306 a year paid in Ether, but then if ETH went to 5K, so 5x from here, yeah, a lot more than that. That 5% interest on ETH might be a lot of money one day. Plus, you can get yourself a $250 bonus depending on how much you deposit using my link below. But what do you think? Am I being too conservative? Am I being too bullish? Or does this sound realistic? I thought I was erring on the side of caution in all honesty, but curious about your thoughts. And as usual, thank you very much for watching. Sorry there hasn't been more content lately. Spent a lot of time on this video specifically, but I will hopefully see you in the next one. Consider subscribing if you haven't, to not miss it.